Okay, so I have completed this book, The Intelligent Investor, and let me tell you, it took a long time because it was a very thick book. And if you saw my post a couple of months ago, I posted about a huge commitment, and I posted my photo along with this book here. That is when I started reading this book here. Okay, and it took me a long time. I tried to read it slow. Okay, trying to cover one chapter one day, then commentary another day, one chapter, then commentary, and I was able, and I was needed to stop for a bit as well in the middle. Okay, uh, because I was not able to read it. Okay, I was not here for some time, so this got stopped for a while as well, but then I restarted again and completed the chapters, then commentary, then chapters, then commentary, then eventually I have completed all the chapters of this book here, The Intelligent Investor. And in this video I want to talk about what I learned as a defensive investor from this book. Okay, so this book basically talks from both perspective, the defensive investor and the enterprise investor. Okay, that is defensive investor, basically conservative, who try to take less risk. Okay, and enterprise investors are the one who are more aggressive, they try to take more risk here. Okay, and because I try to avoid risk as much as possible, because I am trying to maintain uh, stable income for myself from the investment. Okay, rather than trying to get rich as soon as possible, no, that is not my goal. I want to have more stable income, so I falls into the category of the defensive investor. I take less risk. So what I learn as a defensive investor from this one here. Okay, so first of all, see, this book talks about a lot of things from starting to end, that what you should do, where you should invest, how much you should invest, in what kind of things here. Okay, and who should you trust? Should you trust your managers, and how much you should trust your managers? What kind of different kind of assets where you can invest, where you should invest, how much you should invest. All of that is talked in detail from both perspective, defensive investor as well as the enterprise investor. Okay, so let's start from the beginning. Okay, so from the beginning, this book focuses on two things here. Okay, we have common stocks, equities, and we have bonds. Okay, fixed income. So common stocks basically talk about the top, for example, like we have a Nifty 50 in India. Okay, top companies of India. In the same way, they talk about Fortune 500 companies of America as well, and top 30 stocks from that as well. Okay, top 30 companies, stocks of top 30 companies of America, common stocks. Okay, these are considered to be most reliable in the equities. And then we have bonds, which provide fixed income, and they are even more safe than common stocks. Okay, so so if we start from the very beginning, okay, then first of all, it is basically trying to tell you about that what is basically an investor, what is basically a speculator. Okay, how someone can turn from investor to speculator very easily. So how it is very important. I have made some videos on this in the past as well while I was reading this book here. Okay, so how you should avoid speculation, how you should invest, all of that it has talked. Investors, inflations, stock market, okay, general portfolio, all of these things it has talked in detail. Now now for what I learned from this book, a lot, majority of time. Okay, that first thing is try to invest for a long period of time. Okay, that is one thing I learned here. And your expectation is very important. So the most important thing I have gathered from this one here is the expectations. Okay, whatever your expectations are, okay, from your investments, that is the kind of investor you are. Okay, what are you trying to invest? Are you trying to get rich very quickly? Okay, then you falls into the category of enterprise investor, aggressive investor. Okay, if your expectation is a stable income just like me, then you falls into the category of defensive investor. So first of all, make your expectations clear. Okay, are you trying to earn money for your children, for your child who is just born? So there is still time for your child to get older. Okay, so that means you can invest for a long period of time. Okay, then you become an investor. Okay, if you are investing just for a day, you are a speculator purely. No doubt in it. Okay, if you are investing for a very less period of time, you falls into the category of speculator. Okay, and if you are investing for a long period of time, then you are an investor. Okay, that is one thing. First thing I learned, your expectations should be clear. Okay, now my expectations are clear. I want stable income. Either that income is less, either that income is more, doesn't matter. I want stable income. Okay, so and for that I want to take as much less risk as possible, because I want stability. So I want less risk here. That is why I falls into the category of defensive investor. That is the first thing you should clear in your mind when you are reading this book, or when you are trying to get something from this book. Are you a defensive investor? Are you a enterprise investor? So I falls into the category of defensive investor, because I want stability more than growth. Of course I want growth, but stability more. Okay, so I falls into the category of defensive investor. Now then how should you invest? See, whatever money you have that you want to invest, I'm talking about myself. Okay, whatever money I have that I want to invest. Okay, so this book says that if you are a defensive investor, okay, if you are a defensive investor, then you should invest 75% of that amount into bonds, or you can say fixed income securities. In India, if you don't want to invest in bonds, then there are some fixed income securities as well, which can also provide you 7 to 8% of fixed returns. Okay, there are debt funds. Debt funds are available as well, which can provide you same amount. Liquid funds are available. Even liquid funds can today provide that amount as well. Okay, around 7% or so. Okay, so when I am saying bonds, I am talking about fixed income securities here. Okay, so if you are a defensive investor, if you are clear in your mind that you are a defensive investor, then you should invest 75% of your money into fixed income securities, and the 25% into top companies of India. I should invest. Okay, I should invest 75% of my income into bonds, fixed income securities, and 25% into top companies of India, stocks of the top companies of India, which can provide me growth as well. Now, for anyone who is an aggressive investor, what they can do, they have to do just the opposite. Okay, 75% of their whatever they are going to invest, or whatever they have already invested, they just have to make sure that the 75% of their portfolio of an aggressive investor, okay, the 75% of your portfolio should be in the top companies of India. Okay, top 50 companies. I am going to suggest Nifty 50. Okay, so if you are an aggressive investor, then 75% of your portfolio should be invested in top 50 companies of India, Nifty 50, and the rest 25% you can invest in the rest 25% you can invest in fixed income securities. Okay, these are the two extremes that you can follow. These are the extremes you can follow. You shouldn't go above 7 extreme here. and the above extreme here. Okay, so these are the two extremes you can follow. If you want to become the absolute defensive investor, then you should do this. 75% of your portfolio should be in bonds, fixed income securities, 25% into top 50 companies of India. If you are an extreme uh, aggressive investor, then 75% of your portfolio uh, into top 50 companies of India, and 25% into fixed income securities. Okay, now Sir Graham suggests a middle ground as well, that if you don't want to go to either extremes, you can stay in the middle here. Okay, and that is what I have decided to follow here. Okay, which is that 50%. Okay, 50% should be in the 50% should be in the top 50 companies of India, and the rest 50% in the rest 50% in the fixed income securities. Okay, 50-50. That is what Graham has suggested, that if you want to be the most stable person, okay, then this 50-50 something that you should follow. Okay, 50% in the 50% in the top 50 companies of India. Okay, 50% in fixed income securities. Okay, that is the next thing I have. That is the most important thing I have learned from this video, that this is basically what I am going to goal for. Okay, this would be my objective. Currently this is not basically what is happening. If you if you have seen my previous video for my portfolio, then around 70% or something is invested in equities, and even more risky it is invested in small cap equities. Okay, and maybe around 30-35%, 65% or something is invested in equities, small cap equities, and 30% is invested in 30-35% is invested in the debt. Okay, that is basically what is happening here. Okay, now this is what I will keep today for a little amount of time. Okay, after I will make some returns from the small cap, I will take that money out from small cap, and I will invest them in the uh, in the in the multi-asset fund which I have available. So basically two funds I have currently, small cap 250 index, which is risky, and the multi-asset fund, which is which invests in debt as well. So it is more stable here. Okay, so what I am going to do currently, I will keep the same thing here. Majority of my money is in small cap 250 index, and around 35-36% uh, in the in the in the multi-asset fund. Okay, now what I will do, after I will make some returns. Okay, long-term returns. I am waiting for some long-term returns. After I will make some long-term returns from the small cap index, I will transfer that money. I will redeem that amount from the small cap, and I will reinvest it in the multi-asset fund. I will keep doing it until it becomes 50-50. So 50-50% will be my goal, which I will try to achieve. Okay, for now this is not the current state of my portfolio, but this will be my goal to make my portfolio 50-50%. Okay, so this is what the next thing I have learned here, and this is what I will try to do in my own as well. Okay, then there are other things which are available here as well, that what kind of stocks you can select as a defensive investor. So as I said, currently I am not going so for the stock selection for the defensive investor, Nifty 50 is the go-to choice. Okay, these are the top 50 companies for a extreme defensive investor. Okay, but I am not trying to go to extreme defensive investor. I want to be the defensive investor, but not the extreme defensive. So that is why I'm not going towards Nifty 50. I want to take a little bit more risk. That is why I will keep invested in small cap. I will not redeem all my money from small cap. That is not what I'm going to do. I am invested in Nifty 50, but through multi-asset fund. Okay, not directly. So directly I will keep myself invested in the small cap index. That is, I will take that much risk. I am taking that much risk, but I will do one thing. I will keep redeeming my money from small cap. As the small cap fund will keep growing, I will keep redeeming my money from the small cap, and I will keep investing in the small in the multi asset fund here. Okay, so if you try to see the needle, let's say this is aggressive enterprise investor, this is defensive investor. Okay, then maybe currently I am something here. I am currently I am more on the side of enterprise investor. Okay, I believe I am. Okay, almost around here, almost around in the middle, because I have invested in small cap more as comparison to multi asset. Okay, but as my small cap will keep growing, I will keep redeeming money from the small cap, and I will keep investing it in the multi asset fund. So I fall more in the side of defensive investor, because multi asset fund is more stable. It is more better. Okay, because when the market was very down in the December, January, February, even at that time my multi asset fund was in profit. Okay, and it has not gone negative. Even though I invested at the same time in the multi asset and the other funds, my other funds were in loss, but my multi asset fund was in profit. Okay, so that is a very good thing here, and that is the next thing I will advise, that anyone who is a defensive investor, try to invest in Nifty 50 funds. I have invested in Nifty 50 funds, but through multi asset, not directly. Directly I have invested in small cap. Okay, small cap you can invest when you are a purely enterprise investor. So currently I am an enterprise investor, you can say technically, but I am moving towards defensive investor, because I am keep redeeming my money from small cap, and I am keep investing it in multi asset. Okay, so that is the next thing I have done. Okay, also they talked about the expense ratio, that how much these managers are commissioning when you are investing through mutual funds and such. So for that, index funds are the best, because index funds take uh, uh, very less money from you. Okay, very less money from you. Okay, and these are very good. There is not much management cost, you don't have to pay it. Okay, and when you are taking money out, then you don't have to pay as well. So that is one thing I have learned. Try to invest in the index funds, and the multi asset fund I have invested, that also take very less, 0.1%. My multi asset fund is my will be my major fund in the future, because it takes only 0.1% currently as the expense ratio here. Okay, and small cap takes 0.35%, uh, which is a lot. Okay, and that is why I will, that is also one more reason which I because of which I will take money out from small cap eventually and invest in multi asset. Okay, so that is what I will do here, and there are a lot of things are told for the enterprise investors, and how to make sure how value of a company, and different things here. But these are the major things I learned here. Okay, your expectations. Okay, try to know what kind of investor you are, then try to decide whether do you want to go extremes as a defensive investor, or as an or as a enterprise investor. Okay, 25% into stocks, Nifty 50, 75% into bonds or fixed income securities if you are a defensive investor, 75% into Nifty 50, or 25% into fixed income securities if you are an enterprise investor. Try to stay in the middle to balance both of them 50-50. That is something you can do. And then choose your funds properly, less expense ratio, less management cost. Okay. And try to make sure try to take advantage of the tax, try to take advantage of the tax as well. That is something I learned from this one as well. So in India, if you redeem your money after 1 year, uh, if you redeem your money after 1 year, then you don't have, and if your profit is below 1,25,000, then you don't have to pay any money on it. That is the current tax regime. So that is here as well. That is what I will take advantage of as well. That when I will invest, when I will redeem money, I will redeem money after 1 year. When I will redeem money from the small cap, I will redeem money after 1 year has passed, and I will redeem money in such a way so that my profit is less than 1,25,000. Okay, so that I don't have to pay any money on it. That is something I will do with small cap. Okay, with multi-asset, I don't have to worry about this kind of tax because that will be included in my normal income. Okay, that will be considered into my normal income. Okay, so that falls into normal tax brackets. Okay, which is advantageous for me because I am a low earner. Okay, my salary is very less, so this is more advantageous for me because my salary is very less. Okay, so uh, so the money I earn from my uh, my multi asset should be included into my income. That way, it is more beneficial for me because even after that I will fall into a lower tax bracket rather than a higher tax bracket. Anyone who has a higher tax bracket, they shouldn't include it in their in their normal income. Okay, otherwise they have to pay even more as well. For them, those 12% is sufficient. Anyone who is earning a lot, but because I am earning less, so this is best. That is one more reason why multi-asset fund is the best for me. Okay, that is why eventually I will go towards multi-asset fund eventually. Okay, so these are the things I have learned regarding tax, regarding where I should invest, how much I should invest. Even if I am investing more, even if I am redeeming money, I have to make sure that my portfolio is 50-50%. That is what I am moving towards. And multi-asset fund is my final fund, where I will have majority of my money, and I am trying to save regarding tax as well, and I am trying to invest for a very long period of time. That is one more thing I have learned from this from this book as well. Okay, and that is my kind of intelligent investor I am going to become. I will try to become. Okay, so yes, thank you very much. Thank you for watching.